What's up, everybody? Happy Friday. Welcome to episode 57. So today, the important thing about the episode is I'm going to introduce you to my spreadsheet. I'm going to introduce you to my spreadsheet so that you can get more efficient, so you can trade more efficient. All right? But that's not how we just jump into the lesson. First, we do a market wrap-up, okay? What do we see pre-market? I told you the Dow was strong. Tech was pretty strong. I was hoping for both green days, all right? I mentioned this 2 days ago that we're going to see a strong Dow day, probably 400 or 500 points in the next 5 to 7 trading days. 2 days ago, I mentioned it. Yeah, I didn't know the Dow was going to fall yesterday. But again, the reversal has begun, okay? As the 10-year increases, the Dow stocks are going to look more attractive. The tech stocks are going to look more expensive, okay? So it might be good to do some type of rotation yourself. Now, what are Dow stocks? If anybody doesn't know what Dow stocks are, they're retail plays. I like to use the gap, okay? They're oil and gas, or a 3-letter stock like MRO, okay? They're airlines like Delta, JetBlue. They're cruise ships like Carnival. All right, casinos like Las Vegas Sands. And my tracker for the Dow, which I've mentioned probably 3 or 4 times, is Boeing, BA. So you look at the 1 month of Boeing, right? It started to reverse. I do this a lot. It started to reverse. But if you look at the 1 month, you'll see the last 2 days, right? Today and yesterday, strong inflow. It's telling you the Dow is going to recover. So hopefully that makes some sense, okay? Let's talk about today, because today was a tremendous day for the platform. It's been a hard week because we've been averaging down, and the Dow's been, and the market's been throwing up, and it's been getting worse and worse, and the UVX spiked yesterday. So what do? We called the UVX. I did this morning. I'm going to show you a slide. I said the UVX is likely going to fall down to $27.60. Off like 10, 11%, whatever it was. Some of us had $29 puts. So it was really important, because if you had a $29 put expiring today, and I tell you it's going down to $27.60, you can get $1.40. So some option that was worth 40 cents or 50 cents became worth $1.40. Okay, that's a 200% gain. So it was important to know where the bottom would be of the UVXY today to sell. Now, what else did I mention pre-market? STX. And what happened to STX? It spiked. I've mentioned STX probably every YouTube. I keep talking about it. Look at the 1 month chart. It's beautiful. 4 out of the last 5 days is inflow. There is demand. STX will be going to 95 and then 100 soon. I'm just going to keep rolling my options over, okay? I had options for today. I have options for the 16th, options for the 23rd, and I have options for August, okay? STX. Look at the 1 month chart. You'll see what I mean. So when it spiked to 88.50, I sold my options that were due today. Why? Because if it went down, I'm absorbing all the risk. The reward isn't there anymore because it spiked to 88.50. I was more than happy. Now, how could I have lost out? If it spiked to 91 today, I would have lost out on my daily options, which would have been a huge gain. However, I would have made the profit in my longer term options. What else did I mention? Pre-market, I mentioned SoFi, SOFI, and Uber. Okay, they were both up 1% pre-market. I was looking for the best entry. I had orders for both. Guess one got activated? SoFi, right? So SoFi went up 1%. Uber was crushing it. Then Uber came down, and SoFi crushed it. When SoFi went above $17.06, I sold my position. It's a smaller account that I'm trying to grow, so I can't absorb the risk. All right? No, and these weren't spreadsheet alerts. They're not going to spreadsheet. My spreadsheet alerts are very particular to me because they must be 100%. So the last one that I put on there was the UVXY puts at $32 puts that expire next week, the 23rd. I bought them for $3.04. I was trying to sell them for $6.10. It only went as high as, I think, $5.85 today. Yeah, so I'm looking for 100% return from my last alert. Again, my alerts that go on the spreadsheet, when I say alert, 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 I want them to be profitable, and I want them to be as close to 100% as profitable as possible. All right, so I had to choose one. That was my point. I got in to SoFi. My average point was $1.25. Now, I called the min entry. So anybody that doesn't know what min entry is, I'm going to explain my spreadsheet. So remember that term, min entry, max profit. Max profit, I did episode 42, but I'm going to explain the full spreadsheet today. So stick with me. I need 5 more minutes to go through some shit, and we're going to get to my spreadsheet, okay? And this is going to be your spreadsheet. This is going to help you be more efficient. I'm going to take my time. I'm going to slow it down and explain to you. All right, I'm expecting this video to go viral. For viral for me, it would be like 2,500, 3,000 views. So I am going to ask everybody, when you're done, hit the like button. If you haven't subscribed to my channel, please subscribe and then pay it forward. Send this video or this link to like 3 or 4 people you know that are interested in the market, because the spreadsheet is going to make them more efficient, okay? Now, first, let's talk about other stocks that I mentioned. NNet, right? Or NET. I mentioned at 101 yesterday. I bought it in 101.80. It was up to 109 today. D-Dog at 104 was up to like 108. Square at 231 was up to 241. Again, I don't look for this instant gratification, but I'm on the point as far as calling the bottom yesterday. Now let's talk about YouTube. I consider YouTube an extension of my platform, which I've explained to my platform. So I expect all 1,100 members to watch my videos because it's like an after-school special. All right. So 349 members, this is for you. If you're not part of my platform, don't get discouraged. I'm not trying to insult you. My platform is $3.49 to join a week. That's it. I give you my insights. I talk about the market. I do alerts. My alerts are trading at 80%. All right. But I do this on YouTube, and I do it on YouTube to deliver content. So if you're seeing content, please hit the like button, subscribe, push the notifications. I go live every day at 4:30, and no, you don't have to watch it live every day. But it is important if you really want to learn to give up that 45 minutes or an hour every day and listen to the lesson. Listen to the stocks I'm talking about. Add them to your watch list. Listen to what I'm saying about them so you know when they dip, it might be time to enter if it makes sense. Okay? So again, I'm here to improve your accuracy, your efficiency. I want you to understand planning ahead and purchasing on sale. I want you to plan better and secure the profit. Again, it's going to go back to episode 42, but my spreadsheet. Other episodes, 3, 18, 37, all right? Securing profit versus riding the elevator. It's important, all right? I almost did that today. If you ride the elevator, that means you ride it up and down. Okay, but let's talk about my spreadsheet. Let's get right into it, and then we'll go into slides. So my spreadsheet, here's how you do it. You have a bunch of columns, and mark this down. If your options expire with 7 or less days, you need to average out by going out longer term, okay? That's averaging down. But the spreadsheet, first column will say whatever the stock is. Let's go with Carnival. So you'll put in CCL. The next column will say it's a put or a call. I'm bullish, so it's a call. So now you have a Carnival call. Strike price, it's around $25, so we'll say $25. You pick a date. And again, I'm just picking a date for anything. We'll pick July 16th, okay, because it's coming up, okay? Then you go and you say how many contracts you bought. I bought 2 contracts. Great. You put in 2 contracts. Then next, you leave it blank, all right? You call it min entry, all right? This is the secret to make you more efficient. Then you put in what you paid, $1.50, all right? At the close of business, like today, you'll go into Robinhood or you'll Google Yahoo Options Carnival, okay? You're going to look at the options chain that you bought, all right? The $25 calls that expire on July 16th. And you're going to say, I paid $1.50, but the lowest somebody paid was $1.18. The highest somebody paid, meaning it went up to $1.70. So you know there's a range between stocks and options. So again, the lowest was $1.18, the highest was $1.70. You paid $1.50. You think you got a good price. So you did. You look at the min entry, $1.18. You say, I'm 32 cents off. All right, you're gauging how far off you were from calling the bottom. So you say 32 cents, I paid $1.50, I'm off by 21%. So in your min entry column, you put 21%. Do you guys get that? You're figuring out how much you're off by. Because remember, we like to buy shit on sale when it's dipping. So we try and call the bottom. So the other day when I said STX and it dipped to 85 and I bought, it actually went to 84.51. So I missed it by 50 cents. So when I bought my option and I paid $1.50, the best price somebody paid was $1.18. So I missed the minimum entry by 21%. Okay, so let's fast forward. Now we'll go to July 12th, 13th, 14th. Now, every day you want to sell that same option for 100% gain. So you paid $1.50. On Monday, you go, I'll sell it at $3. If it doesn't sell, who cares? Tuesday, you go, I'll sell it at $3. Doesn't sell, who cares? Wednesday, finally, for the example, we're going to say Thursday it sells. So Thursday it sells, you get $3. You put $3 in the next column because that's what you sold it for. Then the next column says your profit margin. Well, you know we were shooting for 100%. So you put down 100%. Then the last column says max profit. Now, the same way we're looking for the best entry when a stock dips, we're also looking for a spike. I tell you guys, plan in advance. Let's get the max profit. So we plan in advance. When the stock spikes, we're out at, like, in this case, 100%. But for the example, we sold it $3. Now, at the end of the business day, you look on Robinhood again, and you're like, oh, what's the most somebody paid for that? Because remember, we always sell on the day it spikes. We plan in advance. We're planning every day. So the day it finally spikes, we're out. So you look on Robinhood, and you're like, okay, I sold my option for $3. The minimum was $2.20. I don't care about that today. But the high somebody paid was $3.90. Okay? So you say to yourself, I sold for $3. I was happy. $30, 30% I missed out on. So in your max column, you put 30%. And then what we do, trade after trade. Anytime you either buy something or you sell an option, you're entering it into your spreadsheet. So as you go down the min entry, you're going to enter 15 trades. So as you go down, and I'll speak to me like I'm talking to myself, Matt, as you're going down, you're going to look. And the first time you missed the trade, you missed min entry by 21%. Then 25, 28, 13%, 16, 18, 20%. You're going to see that you never guess the best entry. You're always off by 12 to like 40%. So the next time I give an alert, this is how you use it, okay? This is the secret, how you use the spreadsheet, okay? The next time I give an alert and I'm like, yo, I love this. It's $3 an option or $300 an option. And you say to yourself, Matt, I'm normally going to pay, you paid $3. I want to get in cheaper than you. I'm going to put the bid in for $2.90. But instead of putting the bid in for $2.90, you look at your spreadsheet and you look at your min entry and you're like, okay, well, I missed anywhere from 12 to 18 to 28%. So I was going to put in the bid for $2.90, but instead I'll take 10% off. 10% of $2.90 is 29 cents. I'll round up to 30 cents. So instead of putting in the bid for $3 like Matt or $2.90 like I was going to, I'm going to take 30 cents off and put it in for $2.60. Now, here's the amazing part. You're going to amaze yourself because it's not going to execute right away. But the point is, sometime during the day, you're going to get the same option that I paid $3 for, that you were going to pay $2.90 for, but instead you got it for $2.60. So you save 10%. That's how you use the min entry on the spreadsheet. So as you go down and as you're trading with me for a month, 2 months, 3 months, you're going to start looking back. When you created this spreadsheet, July 9th, you were off by 30%, 20%, 28%. Your min entry, every time you bought, you tried to call the bottom, but you weren't that good at it. But after a month or two of trading with me and using your spreadsheet, you're going to start seeing it took an extra 10% every time you go in. 10%, 10%, 10%. On the way out, the same way we get max profit, and I mentioned we sold the option for $3, but we could have got $3.90, so there's a 30% there. You're going to start looking at your max profit. Every day you sell an option, you're going to put in the max profit potential. If you sold it for $2 and it went up to $2.40, you missed it by 20%. So you're going to look on average when you're max profit, you're getting ready to sell a contract, whatever it is, something's going to spike during the day, whether it's AI, NNOX, Jumia. I don't care what stock it is. That's the great thing about my spreadsheet. It's your picks. Your picks go on your spreadsheet, and then you use it to say, okay, every time I've been exiting out of position, I'm leaving too much money on the table. So everybody says to me, Matt, every time I exit out UVXY, STX, I left too much money on the table. I sold and it spiked. I sold UVX puts and it went down more. Yes, so you're going to use your spreadsheet. It's going to say that you missed by 60%. It's going to say you missed by 40%, 50%. The next time you get ready to sell an option, you say to yourself, oh, I'm going to sell my Carnival options today. I would normally ask 100%. Let me see. Here it is. I generally miss by 28%. So you're going to say to yourself, I was going to sell them for $4, hoping for the 100% gain. But since I missed by 28%, you'll say, what's 25% of $4? $1. So you're going to say, instead of selling it for $400 a contract, I'm going to sell it for $500 a contract. Lo and behold, it might not sell at 9:30 a.m. or 10 a.m. or 11 a.m. or 2 p.m. But by the end of the day, you're going to get max profit. So don't watch your screen. Don't watch your computer. Don't watch the ticker go up and down and say, am I getting max value? That's not how we do it. We plan ahead. So I just gave you the lesson, okay? I told you my spreadsheet, how you line it up. Now say you average down. You just adjust your spreadsheet. Say I bought 6 more options. Great. So now I have 8 options. My average price instead of 150 is now 120. I know I'm in a fight. So when I'm in a fight, I only look to make 30%. So I take 120 times 30%. My exit is now 156. So you use your spreadsheet to average down to, and then it explains, I've been in a fight because you have 20 contracts, let's say. If you have 20 contracts and at one point you were down 40, 50%, you're happy to get out of it with 10, 20% profit. It doesn't matter. When you sell it, you still want to put max profit in, because even if you're nervous about a position because you're carrying 200 contracts into Friday today and they expire and you have the UVXY and you're looking for it to go down and you don't want to lose money, but you want to make max profit. The point is, use your spreadsheet. Now, here's the best thing about your spreadsheet. You don't need me. You don't need to call Matt in a month and say, dude, can you look at my spreadsheet? Am I doing it correctly? No. Here's what happens. You look at the spreadsheet. You're going to have 15 trades. You're going to see your min entry. You used to miss by 28%. Now you miss by 12%. That means every time you buy into something, instead of being down on average 28% when you buy an option, you're normally down 12%. It's great. So it gives you more cushion. And then when you're up, instead of securing 35%, you get to be a little more greedy and get 50% because you see that you keep missing by the minimum of 15% on max exit. So again, I'm not telling you what price point to sell. People on my platform, I do have a spreadsheet and I put what I'm looking for each option play. It makes it easy. That's my target price. When it hits it, I sell. You have to be part of my platform to see my spreadsheet. But my options information that I just gave you right here, my spreadsheet that I'm informing you how to get yourself into more efficient trader, that's free. It's right here. Watch this episode over and over again. I also talk about max profit on episode 42. So if you're enlightened by this, right? First, you can join our platform. It's $3.49. But say you have absolutely no money, which is crazy because you have money in the stock market and we're talking about trading options. But say you can't afford $3.40, at least subscribe to my channel. I give lessons every day. Every day, there's an important lesson. Episode 37, averaging down on options. Episode 3, which is one of my first episodes, I talked about options. If you don't know what an ETF is, I speak about the UVXY, and we're being strong and it's going down, right? And what episode was that? 18. So let's do some slides real quick. And then again, as I do every day, I'm going to answer questions. But we had a terrific day. So the process works. I ask everybody, trust the process, okay? So this is some dude on my platform. He makes his own spreadsheet up, okay? Since he's joined the platform, he puts in every day his totals. So for June, he's been on the platform for 126 days. His average making is $35 a day. I charge 50 cents a day, so he's crushing it. His 26-week average is $171, and he's made $4,471 since 20. This is great. The point is, he puts in his daily gain, and everything else computes. Spreadsheets don't lie. Spreadsheets tell you if you're doing a good job. So anybody that doubts my platform, doubts my methodology, it's right here. Small accounts. You follow the rules, you make money. All right, let's get another slide up there. I've got a bunch of slides today to show you. Oh, Kevin's daughter started with $103 in her account. Yesterday, she was up to $265. Today, she's up to $308. All right, Kevin told me when his kids, all three of them, when they each raise $1,000, they're going to join the platform. So I applaud that. It's a great idea if you have kids, no matter the age, 18 down to like babies, or you're just planning ahead. Put $100 in. Trade some ideas here. Do it the right way. The account will grow. All right, let's get another slide up there, please. All right, this is my alert yesterday, I believe, right? I didn't get to buy because I actually alerted for July 23rd, but I put in my system of July 30th. Now, the people that bought this, let's go to the next slide. Again, I didn't make the buy, but what did they return? 33%. I think it actually even went higher today, so it wouldn't surprise me if someone returned 50%. Point is, this was an alert going on the spreadsheet. I entered the wrong date. I believe in karma. So when I didn't get it executed, I was like, I screwed up. I must have screwed up for a reason. All right, next slide. Point is, if you miss a trade, it doesn't matter. Now, this was STX. Again, this is right before close yesterday. So you asked me how I was so confident that STX would go up today. Now, granted, it went up $2 from this number, 86.40. It was 88.40 today, or 88.50 when I sold. So I'm showing you guys, at the end of the day, huge buying. The fact that the Dow was strong today, and STX, three-letter stock, falls under the Dow. All right, of course it was going to do well. Now, it always spikes, and then people sell off because it had a rough chart. So STX isn't going straight up. It's not like AMD going to the roof, but STX will go to 95, will go higher. All right, next slide. All these slides have purpose. Okay, here it is, STX. The options that expired, July. Okay, so that was probably the alert. Up 102%, which is great. Actually, the alert was higher, but I did good on my options too. All right, next slide, please. Sorry, STX is a beast. Every day I talk about it. Yeah. Okay, so I was just telling you guys every day. Next slide, please. All right. Okay, Sorrentino Therapeutic. All right. So what did I say the other day, yesterday, during business hours? I said we could see a spike. It was $7.70. I said we could see another spike before the end of the day. No, it was $8.70. I said it could spike to $9. I didn't say I saw inflow like it was going to be great today, great tomorrow, great Monday, whatever. No, I said yesterday at $8.70, I could see it spiking to $9. And what happened? It spiked to $8.99. Next slide, please. One of the followers took a flyer out of the money option, and what did they do off my alert? They made 80% and they sold. So again, you ride the elevator, you go up. When you don't sell, you go back down. Like it went down today, a whole bunch, you probably would have lost all your profit. But when it goes up, we sell, we plan in advance. So if the only thing you're getting from this, besides from my spreadsheet information, is to plan in advance. As soon as we buy something, like my example on the spreadsheet, $1.50, We're going to sell it for $3. If someone wants to pay us $3 the next day, fine, so be it. I don't care when it happens. I just want to make my profit. All right, next slide, please. This is why it was so important to use math, okay? I made a UVXY prediction, $29 puts that expired today. They're worth about 30 cents yesterday, okay? So he saw my prediction about 27.60, and he realized that if they were 27.60, he'd get about $1.40. He put in for $1.36. Now, understand this. If you're a losing trader or you sell when your stock is down, right, you don't follow the plan. You have to trust the process. You make a prediction. If your prediction is correct, you get max value. So this gentleman, instead of getting 30 cents and selling scared, right, $30 per contract, he got over 4 times that. That's a huge difference. When you have 20 contracts, you're talking about $600 versus $2,700, right? And that's what 20 contracts. Imagine having 200 contracts. You're talking about like $1,200 versus $27,000. Okay, $25,000 difference. That's why. So I told him I couldn't be happier that he used math. Okay, that was great. It's awesome. Next slide, please. It's always important to make predictions. All right, so this is somebody else. Now, they went way out of the money, okay? I like in the money. They got a little more greedy. They went way out of the money. What was their return today? 200%. Again, I don't care if they have 1 contract, 2 contracts, 10 contracts, 100 contracts. You know and I know it's all about the percent gain. Now, why? Because you could be trading a $100 account or a $500 account. But if you're trading a $500,000, it doesn't matter. Whatever it is, 200% is 200%. Next slide, please. Yeah, so we tend to crush it. Oh, this is me showing off on Sophie, right? I paid $1.19. I called the min entry. So the min entry that I was telling you about on the spreadsheet, the secret, when I added this trade, I called min entry, $1.19. That was mine. All right, next slide, please. And there it is right there. Right, because it got filled at $1.19. Okay, next slide, please. Sorry, I got real happy. I never called the absolute bottom. All right, eBay again. So I mentioned eBay yesterday, or maybe it was 2 days ago. I think it was yesterday. It spiked. We sold. It was 2 days ago. I took 98%. I re-entered. I think yesterday I had a rough day. I'm waiting for eBay to go past $71 and like 42 cents. That's my prediction. When it crosses 71.42, either on Monday, Tuesday, Wednesday, my options will trigger and I will sell, okay? Next slide. eBay is a beast. It never lets me down. Okay, here's a lesson. You probably can't see it, right? But what happened is on eBond, somebody put a bid in on the ask guide for like 261, 100 or 200,000 shares. Now on the ask side, right, the sell side, they put in walls of 269, 270, 271. What they were hoping is if the market fell, they would get their 261 filled. If they're short, they have to buy back the stock. So they don't want to force the stock up. If you have to buy back 150,000 shares and you're forcing the stock up, you're paying extra money. You're buying at 269, 270, 270, and the stock goes higher. And then people catch wind and they're like, somebody's buying, a short must be covering. And then it pushes up to like $3. The point is, he puts in his bid of 150,000 shares at 261, and then he puts in 20,000 share walls above. So he hopes the price gets pushed down to 261, and people are selling into him, and he gets his 150,000 shares at 261, and that's his exit. He probably shorted it at like 230, so he's probably crushing it. All right, next slide. I was just giving a lesson on how, oh, this is the best one. Somebody showed me this. All right, when you're in the hedge fund mode, you do nothing remotely truthful because the truth is so against your view. Now, this is so true. He made this quote years ago when he was hedge fund. Hedge funds manipulate the market. Institutions manipulate the market. So when I make fun of Jim Cramer and newbies are like, hey, you're a dick for making fun of Jim Cramer. No, he's a sellout, okay? I don't make fun of the other so-called gurus, but I don't know how they make stock picks when the market's not live. You have to watch it when the market's live. So this dude's kidding me. I mean, let's go to the next slide, please. I don't think we have many slides left. I didn't think we had any more slides left because it just irritates me. And meanwhile, every call he makes, remember he called Torchlight. It was $10. They did a 2-for-1 reverse, meaning the stock was $5. Then they merged with MMAT, and now I think the stock is like $3, which technically means Torchlight is like $1.50 because you have to take half of it, right? Maybe it's $2. So he liked it at 10. Now it's at 2. 2 weeks later, what a dick! He just dropped the stock 80%. Let's speak about XL. At XL, he liked it at 1875. It went down to 875. And then he said the shorts are better. XL sucks. Stocks never recovered. You know how many people are stuck holding bags because of Jim Cramer? And then what do you like? Oh, he gave a stamp of approval, right? stamp of approval on DD, right? What happened to DD? It dropped like 30%, 40% in 2 days. He gave a stamp. He'll be like, oh, China, blah, blah, blah. I don't give my stamp of approval. China screwed me. China has screwed me in life so many times. But that's a whole nother story. All right, so I did the slides. I taught you guys. If you're joining right now, please go back to the beginning. I teach you about my spreadsheet. I'm going to ask you guys to please give a thumbs up to this one. I want this video to go viral. Why? Because this is the best video I've shot. This is the most informative video that I've shot because I'm teaching everybody, the simplest person out there, how to be a more efficient trader. Everybody can create a spreadsheet, whether it's on the computer or in a notebook. Everybody can use a calculator and say, what's the min entry that I missed out on? If you find out that you're entering option trades and you keep missing, let's go and talk about the negative, right? You're using my spreadsheet and you're going down and you're missing the min entry, meaning securing the bottom price by more and more. You used to miss by 10% and now you're missing by 40%. What does that tell you? It's telling you your guesswork is getting worse. It's telling you you better slow down because you can't call the bottom. So it tells you a lot of things. Your spreadsheet tells you when you're doing good or bad, and then it tells you what your average is. So you're saying, Matt, I don't know what I should get out of these trades. Is 20% good? Is 40% good? Some people are making 80%. So here's the thing. Your spreadsheet is going to tell you. It's going to tell you. Let's call you Matt. It's going to tell you, Matt, you exited out here at 30%. You gave up 40% in max profit. Here you got 40%. You gave out 50% of max profit. Here you got 20%. You gave up 100% of max profit. Point is, you're going to start seeing, shoot, I could have got 90% of that trade. Shoot, I could have got 103% of the trade. Damn it, I could have got 120% of the trade. Instead, if you're only getting 20, 30, 40%, and you could have got 70, 80, 90%, that's a huge difference. When you claim that extra 60%, the max profit, do you know what it allows you to do? It allows you to be wrong. You don't have to be perfect. If you call something and you made a losing play, I lost on Tiger. China effed me, right? I said Tuesday, Chinese stocks were off 6% pre-market, and I still held these $30 and $25 calls. Yes, lost money. I said I didn't average down because I gave up on them. I don't know if Tiger's turned around or not. I saw some support this morning, but then I saw it sold off a little, so I'll have to check it out. I'm sure someone's going to ask about it. The point is, I'm trying to teach you to be a more efficient trader. If you understand that, then please, and you appreciate this video, subscribe or give me a thumbs up, and please share this with 4 or 5 people you know. The people that you talk about trading with, your trading groups, other people, your Facebook account. I don't care if you don't even, whatever, put it on your Facebook. Be like, this dude right here, his video would make so much sense. I'm going to be a more efficient trader, and I dare you guys to watch it. Yeah, that's it. Give up an hour of your time. All right, let's get to some questions. You guys were great. I appreciate it. I am going to ask everybody on Twitter to pay this forward. Thank you, Joe John. I appreciate that. You could tip on the side if you want to ask a question. All right, here it is. Do I think other Chinese stocks have bottomed? So I mentioned to my platform, 349 numbers. I mentioned it 2 days ago. Not today, but yesterday. You follow KWEB, KWEB, right? What is that? It's a Chinese ETF of internet stocks, okay? So it tells you BB, PDD, Baidu, Tiger, Futu, they're all included. So as this spiked, it was up 1%, then 2%, then 3%. It shows you that there is a reversal. So what happens if the Chinese ETF is going up, then they need to purchase more shares of the underlying stocks. So it's going to go up. So yeah, I'm going to look at Tiger specifically for you because you did ask. And I want to mention it because I haven't looked at it myself. But let's see where it closed at. All right, $20.50. That's not bad. I thought it was going to close at $20.60 because that's where the wall was yesterday, $20.60. I know it opened up at like, what? It was like $22 pre-market. Then it opened up at $21.25. Then they sold it off. I think it went down to like $19.50. So, yeah, that's a good thing. It was outflow today, but the chart does look good. I'm not going to lie. So Tiger is moving up on my watch list. Why? Because when it does spike, and I don't care, beat me up this time, when it does spike, it's going to go from like 22 to like 26 or 27 in one day. Now, I'm not saying that's happening on Monday, Tuesday, Wednesday. It might happen July 25th. I don't know. I have to watch the chart. It's not happening instantaneously. It doesn't just reverse course unless China reverses course and say, yeah, the U.S. regulators can check out our companies and do everything. All right, so let's get another question up here, please. All right, John Joe, you have another question. Thoughts on Simo expiring? Okay, so here it is. The good news is I'm going to have an answer for you one way or another. If I don't like it in the next week, I would tell you that I would go out further because you only have 5 days till your option expires. Oh, wow. Okay, this is a good one. So, yes. Okay, so demand has been huge. Ever since the sell-off, which happened on, 2 days ago for this stock on 7/7, right? It's had 2 huge inflow days. So, I mean, I guess it must have sold the crap out of it. On Wednesday, it looks like it went up to $60. Now it's up to what? It hit like 64 and change today. It closed close to the high. So, yeah, it looks good. So if I was going to give you an option prediction for that one, assuming the Dow is strong, you're probably going to get at least $2.5 more out of it. So I would look to exit out of this position at about $66.98. So anytime it spikes close to $67 next week, have your target set. Exit out, take profit. Good job, John. It's a nice stock. It's a nice chart. You called it well because 2 strong days. So there's definitely been demand. Now I'm assuming it has to do with semiconductors or something like that because we know STX is strong. We know Micron's strong. But again, my favorite is STX. All right. Thank you so much. All right. Let's get another question or comment. Yes, it is called a super sticker. I'll never get that right. I do appreciate everybody joining me today. I know it's a Friday. I know I've asked everybody to join me like every day. Okay. I don't force it anymore. Understand. This live stream is for you guys to make you better traders. So whoever you are, whether you're part of my platform or YouTube suggested me or a friend suggested me, okay? You're going to watch this one. Hopefully you like it. If you see content, please pay attention to the other Ask Matt numbers I've mentioned because if you go back, it will educate you. You're going to go from like first grade to 12th grade level in like 4 or 5 episodes, all right? I'll shoot them off again. Episode 3, 14, 18, 37, 42, 52, I speak about options again. And this one, this was a great episode. So spend 6 hours. All right, QS. Now, QS is crazy because it looks like it's going to rebound, right? And then it sells off and it's down more. And that's just a crazy stock. I haven't looked at it today. But, yeah, I've noticed that I want to get ahead of QS. So QS kind of moves like Blink, all right? It's a very volatile stock. But on days it's good, it doesn't go up 1.5%. It'll go up like 7%. On days it's bad, it doesn't go down 1.5%. It'll go down 7%. So let's see QS today. Oh, okay. So we had inflow today up 26 cents, but it was what? It was probably 2% off at some time. Yes, it does look like it's turning around. However, they could pull the rug on you. Now, if you're correct about QS, and again, I don't want to anticipate what the buying is going to do. This could be like a little bump up and then it could sell off again. So I don't want to tell you that. Or QS could be extremely strong. So the point is, if QS is strong, yes, it will revisit 20% higher within the next 2 weeks. So it'll be touching $29, $30 within 2 weeks. It's at 25 now. So I'm telling you, $25, it can go to like 29 or 30 within 2 weeks, which is quick. So if you got like a July 23rd or like a July 30th option, that'd be great. Now, the unfortunate thing is it could also sell off. And if it sells off, it's going to move down by $2. So it could drop to $23. But let's see what supports like that. People on my platform are blowing it up right now, sending questions. I don't know why they're not watching me right now. Anyway, okay, let's ask another question, please. By the way, it is hot as can be. Okay, do I think XL is going to be worthless? Unfortunately, it might be damn close to worthless. I have $7 options. So I've been talking about people ask about XL most days because some people have the position. And I said, no, I haven't averaged down on EBON. I haven't averaged down on Tiger because they're Chinese companies. I haven't averaged down on XL because XL was beaten up. Right? My DDD option became worthless. Now, thank goodness I make up for these plays with UVXY. Thank goodness I make up with these plays with XTX. Thank goodness I averaged down with Delta and Carnival, right? And went out longer. Thank goodness I have my Apple, my NNOX, and all those out till January. So I'm going to look at XL. I know it was beaten up today. God, these people just don't stop texting each other, and it pops up right on my phone. Thanks, Russ. I see it. It's right there. See it, love. Coming in, Romeo. You guys are having a good time talking. All right, yes, honorable mentions. Yeah, I mean, XL is just so freaking beat up. Even with inflow days, 3 days in a row, which you had going into today, the stock wasn't going up. So today was an outflow day where they were selling it because it got downgraded. So yeah, just like when Kramer put his foot in there, unfortunately, I think I'm done with XL because every time I think I can find some value there and I see some demand, it doesn't matter because there must be so many freaking bag holders. Let's look. Let's see how many bag holders there are. I mean, it's just sick. And the thing is, it's not so bad. I guess everybody but no one wants to hold. If you look at the bottom of the RSI, the support line, I mean, this thing is like a snail. It's like on the ground. It's like lapping up the bottom of it. Yeah, so every time, unfortunately, I keep giving – that was my 3rd time I've given XL a play, and now this will be my 3rd loss in XL. Now, keep in mind, on my spreadsheet, I have like 17 losses for options plays and about 61 wins. 61 wins, 17 losses, 3 of my losses, well, this one's going to be XL. So guess what, Matt? Don't play XL anymore. Stop being stupid. All right. If I ever suggest XL to anybody, just run, smack me. All right. Oh, here's the thing. You know how there's a clown like a clown that's what is he doing to me? Harassing me on that other platform. Yeah. So anyway, let's go past that. I'm not going to talk about that. All right. Next question. All right, OCGN. It might be a good long call. I don't know. I've seen this stock have support recently, which is good because like XL, every time it used to spike to whatever, $10, $10.10, 9 something, it used to sell off. So let's see where it is right now. It was $7. Then it spiked to 10. We sold at 10. It's back to $7. I'm looking at the 1-year chart. The 1-year chart is nothing fancy. The 3-month chart looks like shit. The 1-month chart still looks like shit. No, I'm sorry. I understand what you could be saying. And if it has volume, meaning if there's 39 million shares traded, it traded 13 today. If it trades 39 million shares and there's inflow, yes, it could spike to $8. But right now the chart looks like crap, man. I would not get in it. Now, here's the good thing. If you're looking at long calls, you're looking at it for the long run, right? By January, by February, by March of next year, okay? So you're giving yourself 5 or 6 months. Yes, you could be okay. Now, the good thing about the stock is it's not going from 7 to 15 overnight. If you're correct about the stock, it's going to be a slow process. Anytime you're correct about a stock and you're right and there's real value there, it's a slow stepping process. If your stock spikes up 50%, it's not a good process. That's why we take profit. All right, next question, please. Hey, Matt, thanks for the lesson. Oh, yeah. So, Brent, one of my last private lessons, I think I have maybe 2 more to go. I think 2 more lifetimers have signed up, but they haven't taken their lesson yet. I am here for you guys, right? I'm here to help you be more efficient. So what I told Brent in his lesson is, it's great. It's about getting things on sale. So first, you know when he joined the stock market? He joined in May of last year because he was looking for a macro version. My micro version is we look at stocks to get them on sale. His macro version, meaning a worldly, more larger version, was, hey, the stock market just shit on itself in March. It threw up. Everything's on sale. So that's when he put in $6,000. Now the dude is up past $23,000. Yes, he was up close to $90,000, but everybody made money last year. So me doing this last year, I could have thrown a dart at the stock market, and I could have been like, buy BYG today. It looks great, and it would have went up $1 billion. The point is, now it's a stock pickers market. Now you must see demand. You must see volume. You must use a spreadsheet. You must secure profit. You must plan ahead, and you must play small ball. 1, 2 contracts. You double down 4. You double down 8. You're trying not to blow up your account. Okay? So thank you so much, dude. It was great talking to you today. Next question or comment. Brent, will Nike ever fall? Thinking of puts, the RSI is blown out and it only goes up. All right, so here's your problem. Do not buy puts on Nike. All right, I'll tell you right off the bat why you're not going to buy puts on Nike. If the Dow is strong, if the 10-year goes up and it makes it more attractive to invest in the Dow rather than tech. When money is cheap, tech is strong. When money is more expensive and the 10-year is going up or inflation is going up, it's going to make the Dow more attractive. So Dow stocks being retail stocks, Gap, Foot Locker, cruise ships, airlines, retail, Nike. Nike just crushed it. So no, let me look at Nike actually, because I think Nike went from what? It went from like 112 to 121, 121 to 135. I think when they announced earnings, it went 152. So let's see where it is. But I can easily see Nike at like 189 or something. So yeah, it's 161. I think definitely it's going up, bro. I mean, obviously, the volume's been light ever since it spiked from 133 to 152. But nobody's going to be selling. As the Dow goes up, no one's selling. Now, if you think the Dow is going to throw up on itself, say one morning you're like, oh, the Dow is going to shit, retail sucks, COVID's on the rise, and you think tech's going to be strong and the Dow will sell off 500 points, then yes, enter into your Nike puts, all right? So when other gurus talk about Nike, good, bad, this or that, you can't time it. I'm telling you, use a tracker. If you see airlines off, Boeing's off, they're talking about COVID, there's a spike in something, then think to yourself, retail, it will sell off. Watch the Gap. Put the Gap, Nike, and Foot Locker all in a little category, and they will all run together. Good question, though. All right, next one. Yeah, just like XL. XL's RSI was at the bottom. Who cares? So it should go up, but it doesn't, right? Nike should go down, but it doesn't. What happens when it hits my buy target and it's out of the money? What happens when it hits my buy target and it's out of the money? I'm not sure what you mean by that. If something's out of the money, if I have a, let's say I have an option and it spikes to $10.10. Let's use XL, right? I said I was looking for XL to exit out it was going to spike to $10.10. If it did, I already calculated what my option was worth. So I already put in my ask. So any day, whether it was Monday, Tuesday, Wednesday, Thursday, if it spiked to 10.10, my computer would have went ding ding, you're out. So that's what I mean by out of the money. But in the money or out of the money options, if you're in the money, I'll give you an example. UVXY went down today. So anybody that had $32 puts, $31 puts, 30, 29 made money. Anybody that had $27 puts or $28 puts that expired today, even though the UVXY went down 10%, your puts were worthless. They weren't in the money. So I heard this dude say, I got 27 puts. It's off 10%. My thing hasn't changed. No one wants to buy my options. Yeah, because your options are going to be worthless. And what happened at the end of the day? They were worthless. So I think I got your question right. If I didn't, please re-ask it. All right. By the way, YouTube is only for questions. So it's great. Platform members, public Twitter, I don't care. Webull, you're asking questions, save it for YouTube. I want to answer as many questions so that people can watch this and everybody can learn from each other. That's the whole thing, the great thing about my platform. People ask questions, and people that have been in my platform since the beginning of April when we started, right? So we're like, what, 12 weeks in? 12 weeks in, we've got close to 1,200 members, I think, or 1,100 members. Our retention ratio used to be 99%. Now it's 96%. Shit, law of averages. All right, next question, please. All right, Jeff Stewart, the racing king, Jeff Stewart, right? Would you average down an XL? For 9/16/21, you have call options 73 cents, and it's 50 cents. Okay, so you're off about 30%. Interesting. I don't know what your call option is at, okay? If it's a $10 call, no, I wouldn't average down. I would average down, though. I think you've got a chance with XL by 9/16. I think that's more than enough time. So when you average down and you choose a different strike, okay? Say you choose a $7 strike, you'll use double the amount of money. So you first have the options at 73 cents. Let's say you bought 10 of them. You spent $730. So to properly average down, since you're changing the strike price, is you double the amount of money. So say you spent $730, now you'll spend $1,460. So you'll spend $1,460. You can keep the same strike price. You just want to change your, you keep the same expiration date. You want to change your strike price and make it in the money. So I like $7. XL's been beat up. I really think it should be back at 10, 11, 12. The chart tells me that. I just can't gauge demand, and I can't gauge bag holders. So, that I have no control over. I have no crystal ball. But I can tell you that XL is more than likely to be double digits sometime in the next couple of months. I thought sooner than later. Next question, please. If these guys want to sponsor me, sparkling ice is what I drink, and stay hydrated. It's a great company. All right, Matt, how can we recalculate max profits on options? I just explained that to you. So hopefully you probably asked from the beginning because you've been here a while. But watch the video from the start, the live stream. I explained max profit. What you're going to use is your spreadsheet. So you can't do it today. But after you put in 10 or 12 trades into your spreadsheet, you're going to look at the max profit. And when you get to selling an option, Alejandro, you're going to normally say, oh, I bought this for 80. I would sell it for 120 and make 50%. But you're going to say to yourself, max profit. I tend to miss by 20% at least. So instead of selling it for 150, you would add 20% and you would sell it for 180. So that's how you get the extra 20%. So again, I usually only save my spreadsheet lessons for private lifetime members. The fact that I shared it with you guys, because I want to blow this episode up. I want you to retweet it, hit the like button. All right, I'm counting on my platform members. I want like 500 likes. If not, you guys pay $3.49 a week. So you're telling me you can't hit the like button, but I'm supposed to answer all these questions and all this. And I'm not saying or taking a shit on you. I'm just saying I deliver content. If I was going to charge a real number between the content and the stuff that I deliver, it would be in the hundreds of dollars per week per person. It would be ridiculous if an institution came to me, which they have in the past. They've offered me $5,000 a week for my insight, okay? And that's multiple institutions at the same time, okay? I don't want to work for the institutions. I can't get more angry about that. When I left this, and I made a comment about this on LinkedIn, I said, who would have thought that I ended up here? Years ago when I left Wall Street, I never wanted to work on Wall Street or be involved with the market. Because what the hedge funds, what the institutions did is just corrupt. They just find another way to rob the retail trader. Now, what's terrible and what brought me back here, besides for the opportunity to make money again, is the retail trader. There are 30 million of you. So when I tell you guys the 1,000, the 2,000 watch this, show it to 5 of your friends. There are 30 freaking million to 50 million retail traders out there that these institutions are stealing from. So if I can teach you to trade more efficiently and get the better entry, Save the 10%. Get the max profit. Save another 20%. Imagine if you save 30% on every trade. Every trade you entered into, you saved 10% on the way in. Every trade you went into, you got 20% more on the way out. You made 30% per trade. Now, if you're playing with a small account, it's one option. You're making $40. You do it 3 times a week. It's $100 a week. Through the end of the year, that's $2,000 to $3,000. Now, if you're trading hundreds of options, which I do you know what the difference is? You don't have to be correct about every trade. The fact is, if you're so efficient that you get such a great entry, you limit your losses when you're wrong. And you average down the right way, you limit your losses. God, I can't stress it. People say this guy's bullshit. No way he's a successful trader. Yes, my strategies, my theories, they work. They work as long as the market's not shitting on itself for 10 straight days. What do we have? We have, let's do it right now. 5 straight days, right? Thursday, Friday, Tuesday, Wednesday, Thursday, okay? Basically, 5 shitty days. Yesterday was a shitty day. I know the market rebounded yesterday, but it was a red day, basically. So 5 straight red days. We got 1 green day. What are people on my platform telling me? Shit, man, my positions are green. I averaged down. I sold it for 20% profit. It wasn't 100%, but 20% profit. I was down 60%. Oh, my God, I got slides for you guys on Monday. UVXY, people were getting crushed because they brought it the wrong time yesterday. They didn't buy at the spike. They just bought to buy. No, we buy at the spike, and then we sell the dip. Again, I carried over my options. They didn't execute. So my UVXY options at a $32 strike that I paid $304, I'm probably going to look for north of $7 next week. Okay, I think it's going down to $25 UVXY. Yeah, snapshot it. Next question. Max profit. Watch the episode over again. You guys should be watching this live stream like 2 or 3 times. All right, Matt, Dallas says earnings coming up. Thoughts about DAL before 714. So the earnings calls that they've had during COVID have been so terrible. I figure that's worked into the price. So if the Dow continues to turn and Delta continues to turn, what did Delta go? $43 today, 43 and like a little nibble. So that's $1, right? It was 41 and change a day ago, so now it's 43. So yes, Delta's going to pick it up. I also like JetBlue. JetBlue's chart looks good. So I know I'm a Delta fan, but I'm also a JetBlue fan, and I'm a Carnival fan. I'm not going to lie. They all look good. I don't like Boeing. And the funny thing is, Jim Cramer loved Boeing at 240, right? And then it goes up to what? 280 or 260 now? And now he's cursing this stock. Oh, is China going to really order planes from Boeing? Who knows? Oh, we need to count on China. Jim Cramer, you're such a turd, bro. I hope everybody understands that. Other stock gurus who talk about one stock, well, let's talk about GameStop or AMC. Now, I get it. Everybody has interest in that because they think they're going to the moon, but they're not. When GameStop was 300, which is what, like 3 weeks ago, I said it's going down under 200. Where is it? It was 190 the other day. I don't know if it's still under there. AMC, when it was at 72, I didn't say it was going down that much, because I know a lot of people like to play with AMC, and I know a lot of hedge funds are still playing both sides of AMC, which is pretty stupid of them, all right, because they're going to lose a lot of money if they're wrong. But at 72, I said sell the shit out of it, buy it back at 46. Well, you could have bought it back at 42. Imagine this. This is to you, Alex Wong, okay? You had 1,000 shares at 72. If you sold it and bought it back at 46, or sorry, 42, like it was today, right, this morning, you would have saved $30,000, bro. $30,000. That girlfriend, new car, right? Nice trip, 30 grand. All right, next question, man. Yeah, I like Delta. I like the chart. I know you're trying about hearing about Tiger, but it was just for Monday. You missed out on the alerts, and you're wondering if you should abandon ship. Tiger showed some support today. So watch the KWEB, right? The Chinese web ETF. It'll tell you if it's going up on Monday. Now, again, there is demand for Tiger. So Tiger has a chance to run, but it's not running to $30 next week. If it runs, if China turns around, best case scenario, it will run from $20.50 probably to $25. In fact, the shorts probably will not let it get over $25 next week. Even if it has a terrific week, I'm assuming the shorts sold a lot of calls when they pushed the stock down and sold into it. So I'm assuming even with a good week, it probably won't tap out at 25. So the way to average down with this, if you think Tiger's gonna have a decent week next week, which it can, you would buy the $20 calls that expire at the end of next week. Yes, it's risky, but the point is you're looking for a quick turnaround. So if you get a 15% move in one day, you're going to make 130% on that position, and then you sell it. That's how you get your money back. You're not long-term holding it. You're making a day trade of Tiger, waiting for it to pop one day. Monday, Tuesday, Wednesday, Thursday. You're not looking to recover this option. So you're not looking to average down. You're looking to go double the money. You buy the $20 calls because they're in the money. All right, next one, please. Oh, I love these. Hey, Matt, can I look at these and tell me if they're good? Dude, why don't you pick out like 10 or 11? Now, the thing is, I know you're very supportive of me, so I'm actually going to look at 2 of these stocks. So let's look at CHY, which I've never heard of. It's a fund. It's a high-income fund. Is that even right? You're asking me to look at a high-income fund. Convertible and high-interest fund. I mean, the chart looks good, but the volume is extremely light. But if it's a fund, of course, it's going to be light. There is inflow, so people agree with you. And, yeah, it's probably a safer play. Yes, so CHY, it's a safer play. If you're looking for like 1% a week, that kind of looks like it was going to return if I'm looking at the right stock. But if not, again, it was a fund, so hopefully I got that right. Yeah, this is another high-yield fund, so I guess you're right on. I would stay away from this one. This chart looks like it's a head and shoulders, and even though there has been demand, we seem to be at the top. So I'd stay away from NUH. Oh, sorry, it typed in NUHY. Well, that's what it is, right? NUH. Oh, New Era. Nope, that's the penny stocks. That's not it. This is an nope. Hopefully I got it right, bro. Either that or you don't even know how to spell. Sucks. Usually I stay away from sucks. China pharmaceutical. Oh, God. Dude, really? Well, there is demand. That's the good thing. And this actually might push up. And this is probably your best looking one. And I hate it because it's so freaking cheap. It's SUX, but it came in SXTC. So it's really weird. SUX. Yep, that's what it is. All right, yeah. So, I mean, maybe these are all funds that you're giving me. Again, I like the first one a little. The second one, NUH, I don't like it all. And the SUX seems the most risky of them, but it also seems like it could actually bounce like 20% higher. So that seems like the best one. So that's where I'd put my money. Understand it's risk. I'm not a financial advisor. Do your own due diligence. But please, again, like this. If you're joining my video now, I expect to see 500 likes. If you don't, I'm just going to be disappointed on Monday. So when I'm tweeting out to my platform members, you guys are like, dude, why are you so depressed? I'm going to be like, why don't you guys watch my video? I tell you, it's like an after school special. So the people that are here, I appreciate it. Thank you, Russ. Russ is getting better at stuff. So let's applaud Russ again. Let's move on. Let's get a couple more questions in. All right. What else we got? Anything? Let's have a sip of water. Oh, it's quitting time? All right, quitting time's good. Listen, I love you guys. I'm sweaty and disgusting. I give everything I can for this platform. So please understand that, okay? We had some rough days because the market was throwing up on itself, and I thought it was done, or China threw up on itself, and some people are averaging down. Understand, if I don't talk about a stock, I don't necessarily see the demand. So if I'm not talking about XL or EBON, I'm not saying like this to you guys, or Tiger. If I'm not talking about averaging down on Tiger, that means I just don't call the bottom. It took me 2 weeks to average down on Carnival and Delta. So if I mention that I'm buying something like STX yesterday when it went under 85, and boom, it popped to 88.50 today, right? Those options, $1 options would have been worth $3.50. That's a huge return. I'm looking for instant gratification. I'm looking for volume. I'm looking for demand. That's what I see. So if you're here, you watch this, please give yourself 5 hours over the weekend. Watch those videos I talked about. Make that spreadsheet. If you don't want to do it, then don't even join me here. All right? If you don't take the initiative to make yourself a better trader, and you watch out through the whole video what you're doing because we're here, you shouldn't watch it anymore. You should unsubscribe to my platform. All this shit is true, man. If you don't want to be a better trader and put in the time, I don't care. You work a 12-hour shift. Great. Listen to this shit in your ear, all right? Be a better trader. Improve your skills. You work hard for your money. Why give it away to the institutions? Let's leave you with that. Have a good weekend, everybody.